Hi, everyone. Welcome back to the Commerce Summit, Day 2. So we are in Session 6 now, AMC and the Amazon sphere. What you did in 2020 won't work in 2023. Coming up after this, we will talk to one of our Tenuity experts about how to master omni-channel display and video for Amazon. And then finally, we will wrap up the day with 3 of our partners from Ecom Engine, Stack Influence, and Amped on an Amazon seller's guide to operational success, driving traffic from external sources. So like I said, we're going to jump into AMC and the Amazon sphere. What you did in 2020 won't get you there in 2024. But before we do that, we're going to talk over a few logistics. So the recording and slides will be in your inbox tomorrow, late morning or afternoon. Also, within the next hour, you can log back in at any time using the same link that is in your calendar hold or the one that is in your inbox. Also, you can log back in. Oh, I just said that. So you can download some of our handouts in the panel to the top right of your screen. You'll see some of our recently released reports, including some of our key takeaways from Day 1 and Day 2 of the Commerce Summit. And as you're joining our chat, let us know where you're tuning in from. You can also submit questions right there in the chat, and we will aim to answer those at the end during our live Q&A. And then finally, we have a couple of poll questions live. So make sure to join in via the poll tab on the right-hand side of the dashboard if you go from chat to polls, including one that you can let us know if you would like to talk to our teams after the session. And then I will go ahead and introduce myself. My name is Catherine Bishop, Marketing Coordinator at Tenuity, and I will be hosting the summit today. So a little bit about Tenuity. We have mastered the media that matters most. We are the largest independent performance marketing firm across streaming TV and the triopoly of Google, Facebook, and Amazon. We understand that success requires both strategy and channel specialization. That approach wins us awards and recognition across the industry, such as the American Business Stevie Awards and the Shorty Awards, and allows us to help grow some amazing clients like those that you see here. And we're excited for this session and to be joined by 2 Amazon experts who I will go ahead and hand it over to so they can introduce themselves.
All right. Thank you, Catherine. Hey, team. My name is Aaron Gooden. I'm a Director of Marketplaces here at Tenuity. I've been with Tenuity for about 6 years, and currently I manage all of the account managers that are hands-on keyboards for all of our marketplace accounts. So I hand it to Russ.
Oh, thanks, Aaron. So I'm Russ Derringer, founder and CEO of Stratably, and I've been studying the e-commerce market for almost a decade now. And it sounds a little cliche, but I do feel like it's as dynamic a time as ever. So I'm excited to be here with you all today. Just to give you all a little bit of background on Stratably, we're best known for our newsletter that goes out on Monday mornings, but that's really just one part of Stratably's mission, which is to close the e-commerce knowledge gap inside of consumer brands. So our clients turn to us to get clarity on what actually matters in a sea of shiny objects, where they should prioritize their efforts, and where sustainable growth is going to come from. And we do that through weekly written research, live events focused on practitioner-oriented topics, and then one-on-one trainings and events and consultations with our enterprise customers. So thanks again, Aaron and Tenuity team, for sharing the stage, and I'm looking forward to talking more about Amazon.
Awesome. Thank you both so much. We're excited to dive into this session. So let's take a quick look at the agenda for today. So why 2020 strategies will no longer cut it, and then what to focus on in 2023, and then jumping into how brands are adjusting ad plan in 2023, Amazon operations, and then wrapping up with how to prioritize retailers. So before we get started, we would love to know from our audience, are you currently using tools like AMC? So that poll is live now in the right-hand corner of the dashboard if you toggle over from chat to polls. So let's see what we've got. So it looks like we have a majority saying that no, that they don't know enough about it. So you're definitely in the right place with Aaron and Russ today. So I'm going to go ahead and hand it over to Aaron.
Cool. So as Russ mentioned a little bit, as working with Stratably and his company, there is a huge sea of shiny objects. But before we get into that, Russ, tell us a little bit about what we're dealing with today. What's going on with the Amazon sphere today?
Sure. So I think we should first distinguish between collapse and slowing. So despite the headlines, e-commerce is not dead and it's really not even dying. I think the media has sort of been talking about that for the last year or so, really because neither e-commerce growth nor penetration has continued to grow exponentially like it did in 2020 at the onset of the pandemic. And of course, we have Shopify and Amazon and Wayfair and others that have had to scale back as they overestimated the amount of online demand that was coming. But let's keep in mind that e-commerce penetration has proven resilient following the massive spike in demand that the pandemic created. And so while we haven't had exponential growth from there, the pandemic did reset the baseline figure from which it's continuing its linear march upwards each year. You see this in the market overall, which is what this chart shows. You'd see the same trend if you looked at Amazon's growth. You see this with omni-channel competitors like Walmart, who just reported yesterday, I think 14+% e-commerce penetration was the highest it's ever had. And when you forecast the next 5 years, a little over 50% of dollar growth is projected to come from e-commerce, and a little under 50% is expected to come from brick and mortar. That, of course, can vary by company and category, but the point here is that e-commerce is going to contribute significant dollar growth from here, and thus it should be a big priority inside of organizations. Now, that being said, we do have to address the fact that growth at Amazon is different today than it was in 2019. You can think about this chart. Amazon GMV only expected to grow in the mid to high single digits this year compared to 21% pre-pandemic. Now, the slower growth is off a much bigger base. Amazon's nearly doubled its GMV over the last 3 years to $650 billion. But nonetheless, its growth is slowing. And the key insight with this is that for brands, you simply don't have the big momentum of the past. Pre-pandemic, you could pretty much list products on Amazon, spend some money on ads, and grow double digits. But today, that's really not the case. It's much more competitive today, and Amazon's not growing at the same pace that it once was. So you have to be much more strategic in how you go to market on Amazon. And the slow growth comes at an interesting time when profitability has suddenly become much more important to Amazon and to investors. You've seen the layoffs, you've seen programs get cut. This is just a very different time for Amazon. And it's not that it never cared about profitability before, but it was willing to defer that to make some of the big bets that it needed to do in order to maintain its lead in e-commerce. But that's changed as investors have recalibrated how they're evaluating companies, and also Amazon overbuilt fulfillment and transportation capacity, which is really weighing on its margins. So Amazon, unlike in years past, is very focused on trying to get back to profitability. So before I hand it back to Aaron, the points here are that e-commerce is still healthy. Consumers are not abandoning e-commerce to shop inside of stores, but Amazon's growth is slowing, and it's also very focused on profitability, which means it will be much more challenging for brands and third-party sellers to grow at the same rate that they're accustomed to on the site.
Cool. That's a very great point, Russ. And I mean, from Tenuity's perspective and looking at this kind of eMarketer article of where we're seeing spend kind of tap out around 2024, we're seeing a huge exponential growth in retail media. So I think to Russ's point, yeah, like retail media is still growing, maybe not at the exact same rate that it was growing pre-pandemic, but it is definitely still growing. And we're looking at, upwards of $61 billion being spent on retail media as a whole. And so with that kind of increase in spend, a lot of brands are asking themselves, okay, where should that spend go? How do I optimize that spend to really get the biggest bang for my buck and really understand, is my media actually driving the business forward? And additionally, to make things even harder, the shopper is all over the place. So as we're seeing an increase in spend in retail media from, going into 2022, 2023, and then into 2024, the shopper is all over the map. They're shopping in some brick and mortar. Sometimes they're shopping online, if they're shopping on Instacart or Facebook, and then Maybe they're going to go and purchase some loyalty stuff at at Amazon. And so that customer is going to be having multiple touch points. I think it's around 78% of customers we're seeing that have multiple touch points or omni-channel touch points before completing a purchase. And so really understanding how your media is working for you is definitely huge going into 2023 and obviously beyond. So that kind of begs the question that we asked at the top, in 2020 or pre-pandemic, those strategies aren't really going to cut it anymore. And what Russ mentioned about kind of just passively throwing ads up on Amazon isn't going to get you to grow to the place where you need to grow. So what does that look like going into 2023?
So I think first of all, like you're talking about, Aaron, selling on Amazon means advertising on Amazon, right? Because search results are now filled with paid placements. So again, this will vary by category and search term, but you can think about a search results page having 60% plus of the items shown being paid placements, and nearly all of the above the fold results are going to be paid as well. And so if you want your product to be seen, you need to advertise. And some call it that a tax, like it's a bad thing. Others love it because they can get visibility to their products more easily. But regardless of how you feel, it's sort of just a fact of doing business there. And as you can see in this chart, which shows the percentage of brands spending on these different ad types on the platform, there's very widespread acceptance of this. Essentially, everyone is advertising, and we no longer get a competitive advantage simply by spending money. So the question is, if everyone's doing this, like, what's the next opportunity? How do we differentiate? That's what we need to be focused on moving forward. And from my perspective, the answer is what Amazon's doing with analytics. And the reason why I was excited to present today is because too few of brands really understand these tools and too few are using them. So these three tools listed here, I believe, are really the next wave of Amazon advertising and possibly retail media more broadly. So I'm talking about Amazon Marketing Cloud, Amazon Stream, and Amazon Attribution. These are newer tools that essentially provide insights that were previously unavailable to Amazon advertisers or really any advertiser anywhere. And these are driving new strategy and tactics and fundamentally changing how brands are powering the all-important advertising that they have underway on Amazon. So this is what adoption looks like today with these tools. And in my benchmarking studies, I'm typically benchmarking large to mid-size consumer brands. And I've done a lot of benchmarking on this topic. You can see that just over a third of brands are using AMC today, and then it goes lower from there, all the way down to 13% are using all three of these tools. Saying this differently, while every brand is advertising on Amazon and every brand understands the importance of that, only a minority of brands are utilizing the full spectrum of analytical tools available to power that advertising. So let's talk about this diagram where there's a lot going on, but this shows all of the different levers and tools and programs available to brands on the site. Impact is on the y-axis and adoption is on the x-axis. So impact means how important is this for our business in terms of driving growth or profits? And then adoption is everyone doing a given program or initiative, or are we going to be unique if we adopt it? And then we can categorize those items into different quadrants, and this helps map out what strategies and tactics we can employ and how they're going to differentiate us from our competitors. So top right quadrant, everyone is doing these things, right? You have to be doing these things too. That's where advertising lives, for example, or really strong PDP content. Bottom right, this is common stuff, but lower impact for the 1P brands on the call. Marketing co-op or accruals with your vendor manager is down there, far bottom right. You know, that's something that you want to minimize, right? Not a great payback, pretty much just the cost of doing business with them. Bottom left, this is the test and learn area. Newer stuff on Amazon. Amazon's trying to figure out, you're trying to figure it out. Most brands I would characterize as doing prudent investments in this area, things like Amazon Live as an example. Top left, and this is really where the opportunity is to differentiate. Big impact programs, but only a minority are doing them today. And so this is where you can do something different from your competition in order to stand out. So we talked earlier about not being able to ride the growth wave, right? Amazon's growth going from 21% down to mid-single digits. Well, this is how you make sure you're on top of whatever wave comes your way. And the analytical tools here all fall in this area, as they're all adopted by only a minority of brands today, which I showed you a couple slides ago. So you're not going to differentiate by simply spending money on these different ad types on Amazon, but you can differentiate by spending that money in a much more sophisticated way, which is what these tools allow. Now, there's a lot of ways to utilize AMC, and Aaron's going to share a case study here after this slide. One of the most practical ways that I see brands taking advantage is to use it for attribution. So instead of evaluating ad campaigns in isolation from each other, which is what the left portion shows, AMC allows you to see the interaction of ad campaigns and how upper funnel ad campaigns not only impact paid search performance, but what it does to change search behavior between the very first ad a shopper saw and all the interim steps that they then take before converting. And so what this means is, instead of relying on last touch attribution, AMC says, let's look across the funnel and see the full journey. And then we can really attribute sales to the multiple steps that were ultimately needed to get to that purchase. And when you do that analysis, it starts to fundamentally change how you think about optimizing your ad spend. So most companies that use AMC in this way, they start to dramatically ramp up their DSP spend. It's not uncommon to see those budgets double or even triple when they realize just how big of an impact it's actually having. So it changes how your dollars get put to work. So like I said, Aaron's going to share a case study, but I'll just end with, AMC is ultimately this competitive edge opportunity that helps you get more out of the advertising and promotional budget that you have to invest, helping you meet the growth and margin goals your company has set. So you're not going to get ahead again by simply being on Amazon, right? That growth wave is smaller today. You're not going to get ahead just by spending on advertising. You have to be using tools that others aren't in a sophisticated way in order to really power smart strategies that allow you to outperform. So Aaron, I'll turn it back to you for the case study.
Yeah, definitely. And basically Russ touched some really great points that essentially the Amazon flywheel today is in its new iteration. It looks very much like this. It is kind of these three core pillars, whereas back in the day, it was a little bit more focused on just kind of being advertising and that advertising flywheel as a whole. But now Amazon is really looking at these other components like, hey, we actually can provide a measurement as well and be a source for measurement, like Russ was talking about with Amazon Attribution, Marketing Stream, and Amazon Marketing Cloud, as well as connected commerce. So looking at what is happening with brick and mortar and in-store conversions with Whole Foods or Fresh, what's happening during Prime Day events digitally. It's all of these different pieces that play into each other to generate new business and to accelerate that flywheel so that you aren't just riding kind of that growth wave that Russ was mentioning before. And so what we've been able to do with one of our clients at Tenuity is Poppy, where we've been able to utilize Amazon Marketing Cloud to see how is our digital dollars that we are running impacting the business as a whole, and how are we connecting what's happening in upper funnel and making sure that that's impacting our conversion tactics in lower funnel. And so one of the first ways that we did that is looking at what is our brand consideration looking like, and what we were able to glean from AMC, which again, we didn't have access to before, but because Amazon's Marketing Cloud was available, we were able to ask a query to identify which ad type or ad product type has the largest increase in detail page view percentage rates over time. And then what we can see from this is that the dark blue line is the one that you can see goes very sharp and up to the right in like a hockey stick fashion. That is going to be the combination of video, which includes streaming TV and online video, or OLV, as well as sponsored products and DSP. That customer segment right there that saw all of those three saw the highest uptick in detail page view rate percentages, which means that that's a large amount of consumers that were coming to detail pages that were actually interested or considering purchasing from Poppy. And again, this was data that we didn't have originally access to before, but we have it via AMC now to then say, all right, that pillar of sight, sound, and motion, that video aspect paired with the sponsored product and the DSP aspect together actually create the highest amount of consideration for the brand. And then when we're looking at our conversion impact, we were able to glean from AMC, okay, what does our conversion rate look like when we're utilizing all of these different ad types across really what was the first quarter of the year, or first half of the year. And what we were able to find is that streaming TV and sponsored product and DSP, that segment had the highest conversion rate. And it really validated what we already knew, which you can see the lowest conversion rate was around streaming TV, OLV, and OLV by itself. You see those three segments towards the bottom of the bar chart have the lowest conversion rate, because that's not the point of the tactic. We can see the point of the tactic is to pair it with the sponsored product and the DSP component, so that you do have a larger amount of conversion rate. And I'll talk to you guys in a minute about how that impacts new to brand as well. But this was a great way for us to validate that, yes, streaming TV and OLV, that video aspect is not a play for ROAS, it's not a play for conversion, but when they are paired with sponsored products, they do work. They do work very well together as it relates to conversion rate. So what I alluded to before, new to brand. This is huge for a lot of brands. How am I going out and grabbing my incremental consumers? How am I grabbing those net new consumers to the business in that 365? And what we were able to find out is streaming TV and OLV, that sight, sound, and motion, even together as well as by themselves, the top three, that is by far what brought in the highest amount of new to brand order percentage rates of all of our total orders. So that's key right there, because essentially that's saying all of those publishers and all of the platforms that were able to utilize launching streaming TV and OLV on, those are able to show up in the largest screen in home, which is TV, as well as the medium-sized screen in home, which is your laptop or desktop computer, and grab those consumers who have not purchased from the brand and then bring them down funnel into the brand. That resulted in the highest amount of new to brand. About 34% of all customers converted in Q1 when we ran this test, because of streaming TV and online video. And then something we were able to pilot with AMC was, what does it look like for our in-store conversion? So Poppy is available at Whole Foods. Is the digital media that we're running on Amazon leading to a conversion in Whole Foods in-store? And we were able to find that, yeah, actually it was leading to that. And not only was it leading to a high increase in Whole Foods customers, but it was also leading to 19% of those customers were new to brand. And so what we were able to glean from this as an insight is we can utilize now the DSP data and the streaming TV and OLV data to then target that Whole Foods audience and those Whole Food customers to then be able to bring them in to the funnel and keep them loyal to Poppy's brand funnel. And so this was huge, because this is something that a lot of brands are asking themselves is the media that I'm running affecting what's happening in store? And we were able to create that digital story by saying, yeah, I mean, essentially with AMC, we can see those digital dollars were tied right back to that in-store Whole Foods conversion from an attribution perspective. And then lastly, what did loyalty look like? And so when we're running all these different activations, what did our loyalty look like? Did we see an increase in people not only new to the brand, but people sticking with the brand? And subscribe and save is the best way for us to see that. And so with AMC, we were able to see between January and July, so the first half of the year, about 54% of monthly subscribe and save count increased, which is massive. So not only did we increase our new to brand over the first half, which we originally went over in that new to brand tab here, we kept them actually in the funnel over time. And we've increased our subscribe and save by about 54% over that time frame, over that first half of the year. So AMC is a really great way, because we were able to validate what we were already kind of thought and what we kind of knew, but we were able to then power that and say, okay, now we should start investing more into that streaming TV. We should start investing more into that OLV, because it's bringing our new to brand consumers into the funnel. And then we have the data now and the proof to say, not only did we bring those new to brand consumers into the funnel by running those upper funnel tactics, but we kept them loyal to the brand by increasing our subscribe and save over time. So some key takeaways for today. The first one is really, I mean, it's glaring what you were doing in 2020 or pre-2020 that isn't going to sustain your growth in 2023 and beyond. You really got to make sure that you're utilizing all of these tactics that Russ and I just mentioned. which brings me to the second point. Amazon is letting you behind the curtain. You should jump on that. You know, with Amazon Marketing Stream, Amazon Marketing Cloud, Amazon Attribution, these are things that pre-2020 you couldn't get a clear read on. You maybe had an idea that your streaming TV and your OLD was going to be bringing in new consumers, but you didn't have anything actually on paper to validate that. Now you do, because Amazon is giving you an access behind the curtain and you're able to utilize measurement. And then the last thing is you should be fully aware today of your upper funnel media tactics and how they're impacting your conversion tactics. Like Russ and I said before, long gone are the days of, hey, you know, I don't know what my upper funnel media is going to be driving, you know, for my conversion media, so I'm just not going to run it. That's a very passive way to approach Amazon. And like Russ and I mentioned, if you really want to generate business and you want to jumpstart that flywheel, you have to take the bull by the horns and utilize Amazon's measurement tools that they've come out with recently to understand how is your media powering your business so that you can invest smartly where you need to.
Awesome. Thank you both so much for giving us so many of those insights into Amazon. Before we jump into our Q&A, we would love to be able to continue the conversation for how Tenuity can help you leverage your Amazon strategy. So you can let us know via the poll that is open now in the poll tab in the right-hand corner if you would like to talk to our teams further. And so now we're going to move into Q&A. I do just want to mention the QR codes that are here. You can scan those to connect with Aaron or Russ after on LinkedIn. So just scan those now. And then just wanted to say, I'm sorry, let me find some questions for us. Okay, so seeing that 55% of our respondents said that they don't know enough about AMC to use it, what would you say is the most interesting or helpful feature, in your opinion, to pique someone's interest?
I can take that one. I would definitely say it starts with, what is the business question that you're trying to answer? Are you trying to understand how is my upper funnel media impacting my conversion? Is my video that I'm running bringing in more new to brand consumers? Amazon's AMC or Marketing Cloud essentially is like a query system. And so it starts with, what is your business question that you're trying to answer? And you can go and ask that query. At Tenuity, we have a lot of standardized queries that we've already been able to vet within Amazon's Marketing Cloud that answers a lot of business questions. And anything that doesn't answer that question, we can create custom queries to figure out what additional inputs do we need to pull into that data to get that business question answered. But it always starts with that first piece.
Yeah, I would just add on to that. I mean, I think a lot of companies get started with those pre-built queries, but the flexibility of AMC, in some respects, it's like a bug of it because it's sort of difficult to know where to get started and how to really experiment. But it's really ultimately a feature, because as you start to dig into it, that just leads you to the next more granular question, the next specific question for your business. So the key is just to get started. And I think sort of the pre-built queries is the best way to do it. But as you start to play around with it, let's say, then you got to figure out, okay, what are we trying to drive, to your point, Aaron? And then you just keep going from there.
Awesome. Thank you both. So we have a question from audience member David. Is there a threshold advertising spend and or campaign duration required to take advantage of AMC data?
Yeah, so there is not any sort of threshold on spend. You will get the biggest impact if you're running sponsored products, DSP, and video, like we said. And so there aren't any minimums, especially if you're working with Tenuity. We're able to bypass any sort of minimums on spend in any of those ad types, but it is most effective if you're running all three of those ad types at minimum. And then as far as duration, minimum 30 days. Basically, you set up an AMC instance, and the way it works is data starts collecting from that first day that the instance is set up, and then you can start pulling reporting from that instance 30 days after, and then you can pull them every 30 days or weekly, depending on some reports, but every 30 days after is usually the most time for it's actionable.
Thank you. And then we have another question in our chat from William. Based on the data that is now available, are you referring to 1P? 3P data has always been available for DSP, and then he followed up and asked what data is new for 3P.
Yeah, I think if I'm understanding your question correctly, William, basically the data that we're referring to, yes, it does include 1P, but the big thing is that 3Ps have always had this data available in DSP, and then they've had some form of it available in maybe just sponsored brands in Ad Console. What AMC does is it connects both of those components. So whether you're 1P or 3P, it doesn't matter. It says, here is the data for your sponsored products, sponsored brands, activations, and sponsored display, and pairs that with what you're doing in DSP and creates the connector between the two of those, which originally wasn't available.
And I think too, that's kind of where we're at today, right? But Amazon is continually adding new data sets to AMC. So it's really a platform that is going to continue to get more powerful over time as they add in more retail-oriented data and just supply chain data, and all that can be added there will be added over time. So we're really at sort of the beginning stages of what's possible with it. And Amazon believes that AMC is going to be a substantial business in the future. So you can think about advertising doing $38 billion. Amazon's investing aggressively to make AMC a big part of its business. So we're really just getting started on the data. But Aaron, you're absolutely right. It's the connecting the data together is what makes it powerful.
Awesome. Thank you both so much for answering those questions. Thank you to our audience for being so engaged. Before we wrap up for the day, I do want to call attention to Tenuity's Content Hub. Here you can register for upcoming webinars, watch previous recordings, and then also check out some of our blog posts. So a lot to check out there. You can click the link that is live in the bottom left hand of your screen to get there. And I want to give a big thank you to Aaron and Russ for such a great session and sharing your expertise. Just wanted to announce our other giveaway winner for the Starbucks gift card, Mary Ellen Caruso. So we will follow up after in an email for more details on that. And we will probably take about 2 minutes of a break and get started at 2:10 p.m. Eastern with our next session. So we'll see you all back here shortly.
Bye-bye. Thanks, everyone.
Thanks, everyone.